waiving the loan contingency does carry a lot of risk, and they will be at risk of losing their deposit if there is a shortfall in value. Today we're talking about loan and appraisal contingencies. What are they? What do they mean? How do they work? I've seen a lot of confusion, even on a transaction I was recently on with a realtor who really didn't understand what these contingencies meant. Now, when you're writing a purchase contract offer in California, especially, I'd say, and the Bay Area, competitive markets like the Bay Area, California in general, a lot of times you need to submit an offer to remove the loan and appraisal contingencies just to even get looked at by the sellers because it can be so competitive. What does it mean to remove the loan and appraisal contingency? Well, let's talk about the loan contingency first. Now, the loan contingency allows the buyer a specified period of time to secure financing for the purchase of the property. And if they fail to secure financing, got a problem with the loan, income, something like that, right? If they fail to secure the financing, then they can back out of the contract without penalty. Now, waiving the loan contingency means that the buyer is willing to purchase the property regardless of their financing. And in our situation, what it means is our borrowers are fully underwritten, pre-approved, and solid, ready to go, ready to close fast, and get our offer accepted competitive in a very competitive market. Now, what it demonstrates to the seller is that the buyer is confident in the ability to secure financing. It's not an issue. They're willing to move forward, no loan contingency, and again, very appealing in competitive situations. Now, of course, waiving the loan contingency does carry a lot of risk. If the buyer fails to secure financing and cannot proceed with the purchase, they may lose out on their earnest money contract and even can face legal consequences. All right, next, let's talk about the appraisal contingency. Now, this contingency allows the buyer to back out of the property if it doesn't appraise. So if your property is, call it $1 million, and the appraisal comes in at $950,000, the property didn't appraise, you're allowed to back out due to this issue. Or else you can renegotiate with the seller. That's what an appraisal contingency allows. Now, when you remove the appraisal contingency, it signals to the seller that you're willing to buy the property regardless of its appraised value. Now, again, this can strengthen the offer in competitive situations as it removes uncertainty for the seller. However, waiving the appraisal contingency does expose the buyer to a lot of risk because they could be overpaying for the property if it does appraise low, and they might have to renegotiate some financing options, etc. And they will be at risk of losing their deposit if there is a shortfall in value. Now, again, in competitive real estate markets like California, where there's multiple buyers vying for the same property, waiving these contingencies can make the offer more attractive. And I'd even go so far as to say it is imperative in some cities, if you want to buy a home in that city, you have to remove your loan and appraisal contingency, which means you need a solid, independent mortgage broker writing your pre-approvals. So if you want to get pre-approved, freshhomeloan.com, we're here to help you win. Now, buyers often might feel pressure to remove these contingencies in competitive markets, and that's because they are pressured to remove these contingencies in competitive markets in order to get an accepted offer and buy a house. Now, when it comes to a loan and appraisal contingencies, here's something I think a lot of real estate agents even don't understand. Now, I was recently in a situation where we had no appraisal contingency, but we did have a loan contingency. And the loan did require an appraisal. Now, the listing agent was pushing to remove the loan contingency. However, we did not have the appraisal in yet on this loan. And we needed the appraisal in on this loan to make sure the appraisal was okay, just to remove the loan contingency. Because if for some reason, let's say the house had a hole in the roof and no one knew but the appraiser, well, we can't close a loan with a house with a hole on the roof. So the appraisal is a part of the loan. However, the value on the appraisal is not a part of the loan. But if you do have a loan contingency and no appraisal contingency, you do have to have an appraisal that comes in as is condition, meaning they're ready to lend on the property in its current state. If it is subject to, it means that the appraiser has spotted conditional defects that need to be amended and repaired in order to close that loan for financing. So if an appraisal comes in and it is subject to certain conditions in order to lend on the property, then we cannot close. And it is not due to the appraisal contingency, it's due to the appraisal on the loan contingency. So as a realtor, you do need to understand that. And I just want to make that clear for you. Now, if you have any questions, feel free to book an appointment with us, freshhomeloan.com. I'm Garrick Wordmuller. You can meet with me directly. Thanks for liking, subscribing, and watching this video. Thank you for sharing it with all your friends, family, coworkers, and clients that may need this video, looking to buy a home, that need a better explanation of loan and appraisal contingencies. It's a very important topic. And I am Garrick Wordmuller, President, CEO, Fresh Home Loan Inc., independent mortgage brokers that work for the people. Peace.